economic managers put it, the COVID-19 health crisis is a black swan event, putting a local economy that was on a growth path to a tailspin. But they're seeing signs of recovery, but that too might happen not this year, but in 2021. Now, to help us get a better grasp of what's happening on the economic front, we have Robert Dan Roces, chief economist over at Security Bank. Good morning, Sir Dan. Great to have you here with us on the show, sir.
Good morning, Jess. Great to see you again.
All right, sir. Prior to the pre-SONA event, you have the BSP governor, Ben Jokno, saying, that domestic economic activity is projected to follow a U-shaped recovery, quarterly recovery path, but that we might see further contractions up ahead. How does this color your projections for the rest of the year?
Well, if we talk about inflation, we're seeing that levels will be benign for the most part, probably in the 2.2 to 2.5 range. No? What we saw was a big jump in the transport index, no? And we expect that to be positive as more economies reopen. But we're still pricing in a GDP growth of around -4% in the meantime for full year 2020.
That's for full year 2020. But how
Right.
do you see? Because previously, people were thinking, at least a number of economists were thinking, we might actually see recovery in the third and fourth quarter. Now, the likelihood of that for you is no longer possible.
Yeah. Well, if you say that a slightly negative number is a recovery path, then yes, no. Projections right now are very difficult to do, no, with the fluid situation. Also, that's why, of course, even the BSP has said that we're in for a very deep contraction in the second quarter, right? And probably a negative number as well in the third and fourth quarter, but not as deep as the second quarter. No, no. So if we say that we are recovering because the negative is because the projection is less negative, then yes, that could be some sort of recovery. Notwithstanding the base year effects. But yeah, for the full year, I think that's going to be still be some negative numbers for the succeeding quarters.
But at least for the second quarter, how much of a shrink are you seeing here? Again, like what you did mention,
Mhm.
economic managers are saying, we are bound for that deepest contraction rather, at least in the second quarter of 2020.
Yeah, well, our estimate is around -9%, for the second quarter. Yeah, around that number.
Mhm. But given all the support measures being injected as a response to the pandemic, how sharp of a recovery are you seeing in 2021?
Well, for 2021, it will be important to look at the numbers month on month or even quarter on quarter, no, because again, it's going to be math, no. It can be a bit deceptive if we have a very low base for the second quarter next year. It's because we have uh, yeah a very deep contraction in the second quarter this year, no. So it could probably be around +9 or 10% for the second quarter. But that could be a bit deceptive, no, because of these effects. So what would be very good indicators of recovery will be probably this inflation for the next 2 years. You also have money supply. You also have production index. No? To be very accurate numbers or better numbers to look at rather than GDP. No? Yeah.
And speaking of which, where do you see inflation faring for the rest of the year as well as in 2021? Do you expect it to still at least be in the benign territory for the remainder of 2020?
Yeah, well, the fear right now is there's two schools of thought now. One is the deflationary side, and there's the hyperinflationary side. No, we think it's going to be benign, um, or probably within the target of the BSP, no, the 2 to 4% target. In the meantime, given that um, I think consumption has shifted or clustered towards more essential goods, and then people are more inclined to save rather than spend to non-essentials. No, so that's why probably inflation will be benign in the foreseeable policy horizon.
Mm-hmm. And speaking of which, after inflation still pretty much within that benign territory, albeit coming in quicker at 2.5%. Yeah, BSP Governor Ben Jokno now signaling that they might have more space for some policy adjustments here. What's the likelihood of this happening, and will this be a wise move on the part of the BSP?
Well, as of the moment, it might not be prudent if we cut this soon, no. But BSP is correct. They still have space to do that. If well, and they've been carrying the weight of the monetary policy side or the total response of the government. No, uh, they're probably anticipating a not so strong fiscal response. So that's why they're trying to nudge spending. No, if you take a look at data from the BSP itself, we're seeing savings growing by around 6% since January. So that's a very high savings rate right now. It just goes to show that people are parking their cash. No, they're not spending, and consumption or in-house spending is around 70% of our growth. No, so that's why the BSP did what they did in order to nudge some spending and get the economy rolling.
Well, you've mentioned it. How do we fare in terms of fiscal response here? We're talking loans after loans to cover the shortfall here. That's around $5.3 billion, if I'm not mistaken, at least in offshore, and 1.2 trillion pesos domestically. So, how do we fare as a country, especially when you compare it to our Asian peers?
Yeah, well, for our response, it's not really that thin. No, at least there's a fiscal response that we're doing. No, and it's more on the prudent side. I think we're trying to manage our credit ratings as well because somewhere down the line, that's still going to be better for us. No, if we get to maintain or get our credit ratings upgraded. No, so that will be better for us relative to a recovery in the future. No, so that's why our response, and also we're also limited to the response that we can do. The prescription is 50% of the debt to GDP ratio, 9% of debt. No? So um, that's where we see the government going, no, to be at those levels in the moment.
But in terms of borrowing, how much of a leeway do we still have?
Well, we can as long as we're able to pay it, no. And I think yesterday in the PSONA, the DOF secretary himself has said that we have the capacity to pay off our debts, no. Of course, to some extent, no, that they can see relative to uh, the future projections of revenue by the government.
Mhm. Okay, and then what bright spots are we looking into at the moment to really help bolster economic activity? Where do you see signs of hope, at least when it comes to recovery?
Well, we're seeing some business activities returning, no? And if we look at the index of manufacturing index, that's a very good indicator for us. No, there's a correlation between better PMI numbers and growth, so that's some sign of economic activity returning. No? And also, if some infrastructure projects will be restarted or relaunched, we'll probably see more imports coming in, and well, of course, notwithstanding still contractionary demand, export side, no, that will still be a very good indicator of the return of some economic activities.
Mhm. But how bankable really are infrastructure projects at the moment? Of course, some of those had to be put on hold during the pandemic here. So, and you have the administration pretty much really banking on build, build, build as a strong cornerstone for the economy. But really, at this stage, how bankable is infrastructure spending given the current backdrop?
Well, infrastructure spending has a really good multiplier effect in terms of generating jobs and then creating some complementary industries. No, so the infrastructure project will be a very welcome push for us if it's restarted. No, but on the other side, you have this quarantine measures. You have this limited uh, uh, area to work with. No, so what we're really hoping is a better nudge from the fiscal side, no? But at least with better infrastructure spending, at least we have that. No? It provides, like I said, a very good multiplier effect in terms of generating jobs and other investments.
But you actually expect that to be rolled out at pre-COVID levels.
Um, well, we have yet to see that. No, I think the safest period for us to be able to say that is once the 2021 budget has been crafted. No, so that's in that way we can see where the allocations will be relative to the DBB. No, because like you said, there has been a pause now, and there were some allotments for the DPWH that were reallocated to the COVID response. No? So we have yet to see, and we're hoping, of course, that that gets revived soon.
Okay, one other thing that the administration has always been putting its hopes on would have to be, of course, tax reform moves here. How crucial is it for lawmakers to actually pass create?
Uh, that's one of the bigger fiscal response from the executive side. No? So, well, it could have been better if there were other fiscal measures, no? Like a rise or the other fiscal legislations that were proposed. But at least create will also be some sort of a fiscal or a better fiscal initiative, no, that could generate more investments, especially to the countryside, and provide even more employment, no, which we need now.
And at the same time, you have cases soaring still. It seems to be like the new normal now is the country hitting 2,000 levels, 2,000 infections on a daily basis. Question now is how do we balance between revving up the economy and protecting public health?
Well, that's always just the harder balancing act to do. No, you have um, um, Secretary Dominguez saying yesterday that it's non-binary. You know, if you have a choice between health and the economy, no, it should be non-binary. To some extent, that's true. Um, it's very hard to choose between, closing down the economy and everybody suffering more versus opening an economy with rising cases and then spreading the virus itself. No? So actually, that's a very tough question to answer. No, I would be more on the exercising health protocols in order for us to function within a limited operational environment in the economy. No, so yeah.
Well, I guess you're not alone when it comes to having a struggle answering the particular question there. But lastly, a big news today, ABS-CBN. I just have to ask you this: Fitch Solutions warning about how a politicized shutdown is an impediment to investor sentiment, foreign investor sentiment. What's your take on this?
Yeah, the optics will be bad, no, if it's not projected in such a way that they stick to the structural reforms that they've been harping about. No, if it becomes politicized, of course, that's going to be very bad on the optics. It's going to be very bad in terms of perception towards more investments in the economy. But that's the government contradicting itself. No, they want to pass create to attract more foreign domestic investments, and then you see these events happening. No, so um, um, it would be better if we stick to the structural issues rather than the political one. No,
Mhm.
and as I said, perceptions everything, especially in attracting foreign investments. No, so the optics can be good or can be bad, depending on how the messaging of the decision gets out. No, so yeah.
All right, that's something definitely that we have to keep an eye on for the rest of the day as lawmakers are expected to vote on the franchise. But other than that, a lot of things happening on the economic front. Thank you very much for your insights, Sir Robert Dan Roces, Chief Economist over at Security Bank.
Thank you, Jess.